All right, for this video, I wanted to talk about what are the business tax deduction limitations for company vehicles that are leased through your business. Okay, so you as a business owner, you can lease vehicles through your business name, tax ID number, address, that's all okay. You can lease them for yourself as an owner or employees. But if you do so, there are certain limitations on what amounts you might be able to deduct at the end of the year on your tax return. And so that's what we're going to go over in this video. So there's really two limitations that could apply here. The first one is the business versus personal use limitation. Right, so when you use a vehicle for both business and personal uses, you can't deduct the total cost of the lease payment. Right, the piece of the deduction that's attributed to personal use is a non-deductible expense. So for example, if John is a business owner and he uses a vehicle 75% for business, 25% for personal, and his monthly lease payment is $1,000, the business is only going to be able to deduct $750, right? So 75% of the payment. The remaining amount is attributed to personal use, so it's a non-deductible expense. Okay, that's very, very important. So it's important to track your mileage every year so you can carefully assess what percentage of the vehicle uses was business. Now, the second piece here, which applies to lease vehicles, is a potential lease inclusion amount. So the lease inclusion amount is a percentage of part of the fair market value of the vehicle multiplied by the percentage of business use. Okay, so what does that mean? It means that if you lease a vehicle that exceeds a certain fair market value, the IRS kind of deems that to be a luxury vehicle. And so they don't want you to get the benefit of the full deduction. They want you to have some kind of add back because you're leasing a vehicle that in their minds is too nice or too expensive. And so the lease inclusion tables help you figure out how much of that deduction has got to be added back. Okay, so let's look at an example here and show you how this is done. So I've got the fact pattern in front of us, and then we're also going to reference publication 463, which covers the calculation and some of the limitations. Okay, so starting at the top here, right? So in our fact pattern, we have in 2020, so last year, John, the sole shareholder of an S Corp, decided to lease a new Mercedes-Benz, and it has a fair market value or MSRP of $70,500. Now, he signed a 48-month lease, and the monthly payment has been $1,000 a month. So if we're looking at his 2021 financial statements and his 2021 tax return, on the financial statements, the company paid for and deducted $12,000, so $1,000 a month for the whole year, as a company expense. That's okay. The company's allowed to pay for the whole thing in full. We just have to make the appropriate book tax adjustments on the return to back out that non-deductible portion. Okay, so let's look at the first one, which is a book tax adjusting journal entry for that personal use item. So John drives the vehicle in 2021 for 20,000 miles. Okay, so that's what the odometer will show. Now, of those miles, when he looks at his log books, 2,000 were for personal, 2,000 were commuting, and then the remaining 16,000 was for business. So John's business use of the vehicle is 70%, and the way we get that is 16,000 business miles divided by the total. Remember that personal miles includes commuting, so the IRS doesn't consider this business miles if you're commuting back and forth to work. It's all personal. So the business use here is 70%, 16K divided by 20, so the personal use is going to be 30%. Okay, so the first adjustment here is to remove that personal portion. So of the $12,000 in lease payments that were paid during the year, the company must record a book tax adjustment on its return of $3,600, right? So that's the personal use of 30% times the $12,000 total. So if you're looking at the return, you're going to see it as a line 18 item, 18C for non-deductible expenses, and you'll see an M1 adjustment for the same amount, right? Now, the second piece here is the inclusion. Now, if we look at Pub 463, now again, remember, the inclusion amount only applies if it's an expensive vehicle. So the standard for 2020 was 50K, right? So in our case, we've got a really nice vehicle. It's over 50K in FMV, so we've got this inclusion issue. If you lease a vehicle that's below the certain thresholds, then you have no inclusion amount. You're just doing the personal business use adjusting journal entry. But in our case, we've got to do the inclusion because he got a Mercedes. So if we look at the table in 463, Appendix C3 is the one that we're going to be referencing. So what we're going to see here is that if we look at the second year column for the lease, the inclusion amount is going to be $110 for a vehicle of this fair market value. All right, so let's look at the tables and I'll show you more clearly how we arrive at that number. So if we're looking at Pub 463, there is a section here. In Chapter 4, Transportation, you can look at section Leasing a Car. That'll include some more examples and some more details on how to compute this inclusion amount and what's deductible. But in our case, we already know where to look, so we're going to go all the way to the back in appendix, in the appendices, right? So pages 38 and down. So the appendix we're looking for here is going to be C3. Which is for 2020 lease vehicles, right? So here we have Appendix C3, where we cover inclusion amounts for passenger automobiles, first lease in 2020. Remember, we leased this vehicle last year, so we did the same adjustment last year, but now it's 2021, so we got to figure the 2021 lease inclusion amount. So the Mercedes was leased in 2020. Now the way this column works is you look at the fair market value range for the vehicle, and then you move across depending on what year of the lease you're currently in. So in 2020, it was a first year lease, and now 2021, it's the second year of the lease. So we're working with the second year column here for a 2021 tax return. So fair market value, remember the vehicle was $70,500. So we moved down here to 70K to 72K, and then we shift across to the appropriate column, which is $110. So that's where we get that lease inclusion amount of $110. Okay, so now to adjust it even further, what we have here is the account again. So we looked up the lease inclusion amount, we got the $110. Now we adjust it even further for the business use portion. So the business use of the vehicle again was 70%. So we tag 70% of that inclusion amount, which is going to be $77. So 70% times 110, and that is the second book tax adjustment to reduce the deductible expense. So now what's the overall impact of this after we have these two book tax adjustments? Well, of the $12,000 that we started with for book purposes, the actual amount that's going to be deducted on the tax return in arriving at that line 1 ordinary business income is going to be $8,323. And we got there because we took the $12,000, we subtracted the $3,600 in personal use, and then we subtracted out again the $77 in lease inclusion amount. Okay, so remember the lease inclusion adjustment is just an additional adjustment to the deductible amount of the expense. So $8,323 is the total amount we're going to be deducting now. And then that means that if we combine $3,600 and $77, that is going to be a non-deductible expense, and then one adjustment for $3,677. Okay, so that covers it. I hope that was helpful. If you have any questions, feel free to leave me a comment below, and I look forward to seeing you again on the next video. Thank you.